A lot of us don't succeed in making profits in our investments because we are not clear why we are investing in the first place. And even if we make an investment for the right reasons, we forget about this original purpose somewhere down the line and end up taking contradictory actions that lead to losses or reduction in profits. Being clear about the reason why we are making a certain investment and then taking actions that are consistent with that purpose is the starting point for successful investing. In this video, we'll discuss 3 real reasons as to why you must invest that apply to almost everyone. Be sure to watch till the end of the video to understand how the reasons that you choose should determine the time frame of your investment operation so that you can get the maximum returns out of your investments. Welcome to A Game of Money, where we learn how to make better decisions in investing, business, and careers. This video is the second video in a 5-part series called Start Investing series, which is meant to help beginners get started in investing through simple steps. So let's get started. The world is going through an inflationary phase in the wake of the pandemic. The Federal Reserve, which is the US central bank, has projected inflation in the US to be 4.2% in 2021, slowly tapering off to 2% in 2025 and beyond. So how does it impact you? Let's take the price of a basket of goods to be $100 at the beginning of 2021. The same basket would cost $113 by the end of 2025. What does this mean for the $100 bill you had in January 2021? It would only be worth $88 by December 2025. That's a 12% loss in value. If you extend the time frame to 20 years, then the $100 bill would lose at least a third of its purchasing power and would be worth just $66. What are you going to do about it? If you're hoping that the savings rate from banks would help you close the gap, good luck. In most countries it won't, and certainly not in the US. While interest rates could be increased to curb inflation, if increased too much, it would suck money out of the economy and slow down economic activity. And so the central banks would not increase interest rates beyond a certain point. So, saving money in bank accounts and being reliant on interest rates to protect purchasing power of your money is not a viable option in most countries. So, investing, which has average rates of return that are typically higher than inflation, is the best way forward. And therefore, protecting the purchasing power of money is the first reason why you might want to invest. But there are some unique challenges to investing in inflationary periods. As a principle, one should avoid investing in assets whose income generating capability is disproportionately into the future. Examples would be bonds whose income is fixed and you get most of it in the future. If you are investing in stocks, invest in companies that have pricing power. That is, if the price of the goods they produce increase due to inflation, they can pass on the price increase to the consumer without losing market share. Example would be car manufacturers like Tesla. Speculative assets like gold, cryptos, etc. are good options, but remember to keep a close watch as these are speculative by their very nature. While investing doesn't always guarantee that you will end up ahead of inflation, it gives you the best shot at protecting the purchasing power of your money. One of the overlooked aspects of investing are the tax efficiencies that it can bring you, and it is the second reason why you must invest. All the retirement savings accounts in the US, such as the 401k, Roth 401k, and IRA accounts, give you the option to invest in at least 8 to 12 mutual funds and index funds based on the arrangement your employer has with the financial services provider. Some plans could even include the possibility of investing in individual stocks and bonds, but they are less common. The biggest advantage to all this is that your employer matches your 401k contributions, and if they match every dollar, then it's a no-brainer to invest up to the point they match. And if you reach the limit that can be invested through these retirement savings accounts, you still don't run out of tax benefits. You can invest through your personal online brokerage account, and if you hold on to your investments for at least 1 full year and manage to make a profit, then the profit would be taxed at a long-term capital gains tax rate, which is by design lesser than the ordinary income tax rate in your tax bracket. But if you're speculating or trading and are only holding your investments for less than a year, then the gains would be taxed at the ordinary income tax rate as per your tax bracket, and you don't stand to benefit from lower taxes, which is all the more reason to invest long-term. So as you can see, if you max out your retirement savings plans, invest intelligently, and try not to make a loss, then you're most likely going to pay lesser income taxes on your investment capital gains than you would pay income taxes on your wages. If you see value in the content so far, please smash the like button and consider subscribing to the channel, and also hit the bell icon next to it so you get notified for new videos. Now we reach the third and the most attractive reason as to why you must invest, and that is to build wealth, either in the form of a passive income stream or through capital appreciation or a mix of both. During the course of our careers, we tend to get caught up in chasing higher salaries with the mistaken notion that it is the primary pathway to build wealth. But in the daily grind, we tend to overlook the obvious. Salary-based incomes have a limited shelf life based on our productive years and the amount of time we put in. On the other hand, investing has the dual advantages of the power of compounding and an unlimited shelf life. I say unlimited because even after our days are done, the investments that we make can serve our families. Considering investing and not jobs as the primary vehicle to build wealth is something that takes a mindset shift, along with the knowledge of smart investing techniques that helps minimize downside risks. So we can safely say that investing, if done sensibly, will not only protect your purchasing power, but will also accelerate your path to wealth. And that wealth would in turn make it easy for you to follow your passion, retire early, or set your kids up for success. And most importantly, it'll give you freedom and put you in control of your own life. And now for the last section on why your reason for investing should determine the time frame of your investment operation. Your overall investing is most likely a combination of all the three reasons that we discussed so far. But at a per asset level, you might have a singular reason for investing in that particular asset. If it's an inflation hedge or for speculation, such as gold or Bitcoin, then invest for the short term. Always be on high alert and be willing to take profits. If it's for tax reduction purposes, such as a retirement account, obviously invest for the long term. Resist all temptation to dip into it before retirement. If tax reduction is a desirable benefit, though not the primary motive, such as for investments in mutual funds or stocks outside the retirement account, 1 year plus is an optimal term. Leave the investment untouched for at least 1 year so that you can be taxed at the lower long-term capital gains tax rate. If it's for wealth building outside retirement account, such as growth stocks, invest for the very long term as long as the fundamentals are strong and can support that growth. This allows to make use of the power of compounding, which will get diluted if you disturb it. Let me know in the comment section below if this video gave you clarity on why you must invest and how to use those reasons to guide your investing time horizon. Now the next question that will naturally spring up in your mind is, what should I invest in? My next video is going to be about the different types of investments which you can find here. I'll add it as soon as I make it. If you would like to watch the other videos in this Start Investing series, you can click the playlist here. Or if you'd like to check out other interesting videos on the channel, you can click right here. I'd appreciate if you'd like and subscribe. See you again.